Hey guys, good afternoon. This is Stock Guy 22. Wanted to review a chart today on the Dow, the industrial, and just a key pattern that's been forming. It's called the Head and Shoulders formation. You might have been reading about it in some articles lately. I wanted to go through what that looks like and how that could impact you, okay, in your trading. So let's take it step by step here. First, what is a Head and Shoulders formation? If you go to Investopedia, you'll get the pretty good, easy definition of it. Okay, so it's just a chart formation based on the price of the stock. Okay, so the pattern is that it almost sets up like a person. It's got a shoulder, it's got a head, and then it's got another shoulder. Okay, the shoulders being lower than the head. Okay, for the highs. So what happens is you rise to a peak, which is the left shoulder. You come down, hit some support, go back up, make a head formation. Okay, that's why they call it that, because it looks like a person. Comes right down, hits that around that support again, and then the other shoulder forms up. And you are going up as that's happening. So you can see that on all these patterns, you get some nice movement there. Then once you break down and you break that trend line, you're going to go much lower. Okay, so how does that apply to the market as of today? Okay. So you really have to go back to a weekly chart. Okay, hard to see it on a daily chart. So what I've taken here is a weekly chart of the Dow from 1983 all the way to 2010, today's date, okay, which is September 23rd, 2010. Now, how's that play out for us here? Okay, if you can't see it, I'm going to show you where that head and shoulder formation is here. Okay. So here's our left shoulder, here's our head, which is much higher than the shoulder, and now we're coming up, oops, now we're coming up to a right shoulder being formed. Now we haven't started to drop back yet, okay, so hopefully you can see how that matches up. Let's bring the other one up again. You can see how that's very close to what happened here, okay. Our key level in this case was right around this 8,000 level. Okay. So what we're going to be watching for here is how the market handles in the next little while into the end of the year. What I'll be watching for personally is how we handle into 11,000. If we break through that level, I'll be watching for 12,000 to see if it gets hit, because you could go a little bit higher and then drop back. But I wouldn't suggest taking too many long positions during this time. So the way you have to look at it is, the other key level that I'm going to be watching for is how we handle 10,000. Now, what I wanted to show you here was, you can see each time we've broken through this key level of 10,000. There's been a few times here, here, okay, so 10,000 is right here, okay. It's a big psychological level, okay. It's a big psychological, we've broken it down here. Here we broke just a little bit below, came back up, broke it down here, went to 8,000. Here we went a little bit lower than 8,000, broke it again in 08, okay, when we started to bottom out in 09, and we went below the 8,000. That's when everybody was panicking. Okay, came back up. Okay, so this range is pretty key here between 10,000 and 8,000. Okay, so that's what you're going to be, what I'd be watching for anyway. Because a lot of people, what they might do, if they're not aware of a pattern like this, they'll just be buying into 10,000, thinking that that's a good support, and then we drop back further. A few other things to note on this. If you look down here, look at the times that we've run up in the market nicely. The volume's been much bigger. Okay. Okay, so all those moves up, you can see the volume was much larger. Okay. In this case right now, we've been coming up on lighter volume. That's one thing to note as well. Okay, so this last move up that we've had from You can go back to March 2009, April 2009, when we started to break through some key levels. We had a great year last year in trading. But right now, this year has been a little bit choppy because we've been going back and forth. Okay, so just be aware of the fact that we can't break through 12,000, which we're not too far away. Okay, it may seem like far away, but it's not that far. Looking back at this type of chart, okay, you're only just over 1,000 points away, so we're not too far. 11,000 will be key to watch, but you can see that pattern setting up on here. Okay, so I'll try and post this chart in the chat room, and I'll leave it up on here as well. Okay, so a few key things to watch: those key levels that I talked about, the 11,000, 12,000, and also how we handle 10,000. If we break down 10,000 with some decent volume, then there's not a lot of support, as you can see on the chart. The odds are that we'll probably hit towards 8,000 very quickly. Okay, and you saw how it happened here each time. Okay, so that's something to really be careful with. Right now, this past year, I've probably been the least exposed to stocks. I've got longer term positions that I hold that I've had for quite a long time, but there are just certain stocks that I've been buying as shorter term swing trades. Okay, so when you get these type of situations, you don't want to buy everything during this time, because your likelihood to go up and to go down, the risk to reward is not going to be that great. Okay, unless we broke through this 14,000, right, which we're still a little ways away, then the head and shoulders wouldn't work. Okay, but just be aware, if you're thinking that some things are a great deal up here, you could be wrong. Okay, especially if we drop that 10,000 level. So I wanted to make sure that the way you apply it towards your own positions is to not to add too many positions when you're hitting key patterns like this. Okay, so hopefully that helps you out. I'll try to do more of these type of videos. Usually I post the charts that you can see on Twitter, on my Twitter account, twitter.com/StockGuy22, and also in our chat room. I post live charts each day. So I hope you enjoyed this little video, and we'll try to do more of them.